Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, February 23, 2015. You're looking at a slightly different chart than normal. This is my other platform that I'm always referencing when we don't have when I don't have the commodities or futures prices on the charts you're used to looking at. So I'm going to try something new, see how it works out. I can go back and forth if we need to. Either way, you're looking at a daily chart of the SPY, and today was basically a flat day. Nothing much happened. The market stayed pretty much close to home most of the day. It did stray a little bit on the upside, a little bit on the downside. But for the most part, it was a very light volume day, uneventful, nothing much going on. Maybe you could say that, and there can be an argument made that the market players, if you will, are waiting for the testimony that's going to take place by the Fed chair, Janet Yellen, tomorrow. I think it's a bunch of nonsense. They ask loaded questions. She doesn't answer them. That's the way it works. But nevertheless, if you have a kind of a nothing day and it was light volume, a case could be made that everybody's waiting to see what the testimony of Janet Yellen's going to be in front of the I guess it's the Senate Banking Committee, or who knows what it is. It doesn't make any difference. We just let the charts tell us what to do. All the rest of it, they can have it. So we're close on the upside to this level here. The high would be 12.1297. We're at 12.1121. That's really not that far away. And remember, I had been mentioning the upside target on the S&P E-mini, which now I can bring up and show you. Okay, the E-mini contract does not have the same print. Okay, this is a daily chart also. But, I do have it's 2106.50 as we speak, and I do have a level of 2135 as a target that hasn't been satisfied on the S&P E-mini contract. So we're looking at the April contract now, or this is the continuous contract you're looking at, but the quote is for the April 2106.25. And, it doesn't have to get there on this run, but if the market's going to spike higher, that would certainly be a fair amount of resistance on the upside. So I think it's worth continuing to mention. Couple of things on the S&P. So right now on the S&P E-mini, you're looking at a 2108 kind of pivot. So I'm looking for the market to pivot around that point. Today was pivoting around that point. Was upside resistance. And tomorrow, if we open above 2108, I think that'll provide support. And if we open below it, I think it'll provide a fair level of resistance. Let's go over to the S&P, SPY again. And so basically what we have is we're in the 1 week late for a weekly cycle top. Now, can we trade right through the weekly cycle top? Absolutely. It seems to be going that direction. However, there's nothing wrong with 1 week late in terms of a cycle meeting its deadline in terms of time. It happens, a fair amount of the time. So I'm not ready to say that the market blew through yet. I still think it needs to correct a little bit to work off some of this overbought condition, and then we can kind of get a pullback of modest proportions here, maybe into this area. And then, if we did begin to pull back, well, I'll give you levels when we get there. As we get there, I'll give you target prices. But right now, we could be just setting up for the next move higher. And basically, over the next few months, everyone should be expecting higher prices in the S&P. Sorry, I just had to take a drink. So there are going to be higher prices in the S&P. In fact, this is a bullish chart, right? If we go over to the weekly chart, let's just take a bird's eye view of what's going on. Anybody see anything wrong with this chart? No, this is in an uptrend. When these two these two moving average, 20 is the red, the 50 is the blue. When these are spaced out in parallel, okay, for a long period of time, okay, basically 2 years, okay, that's an uptrend, folks. In case you haven't seen one before, this is what they look like. This is in an uptrend, so there's nothing wrong with this market. In fact, if we look at a monthly chart, it begins to look like a parabolic uptrend, but see the spacing here? Okay, it's actually getting wider, which means the market could be getting stronger. Okay, so this isn't a market that you want to try and guess tops. This is a market where you want to buy pullbacks. And I don't mean intraday pullbacks of 5 or 10 points. I mean, you start to see a pullback in the market, you start to pick your levels, and you can see another leg up on the upside if we get a decent enough pullback. So let's go back to the daily, and then we'll go over to the other markets. But keep in mind, there's always a market available to trade. I don't know why the charts are doing this. This is one of the reasons why I don't use these charts, because they have a tendency to do this. And I'm not real sure why this happens. Okay, so let's go back to the daily. All right, we're back in business. So, okay, downside in the morning. I do my numbers in the S&P E-mini. I'll come back and translate it to the SPY. For the morning, I have, let me check my notes here. 2095 down to 2093 should be satisfied tomorrow, preferably in the morning hours. Those numbers should be satisfied in the morning. We're trading roughly, let's call it 11, 12 points higher than that now. We should see the SPY $1 plus lower tomorrow. We should see the S&P E-mini at 2095 to 2093 sometime, hopefully in the morning hours, right in this area here. But at minimum, it should be satisfied tomorrow. Where does that coincide with? It coincides basically with this top here. The high here was 2095. This was on the 13th. This was the closing price, 2093.50. That's what we should be testing tomorrow morning. That's what my work tells me. Okay, so if there's nothing to trade in the S&P, or maybe there's not much volatility in the S&P these days, let's go somewhere where there is. Gold. Okay, actually, I don't even have to show you GLD. I'll just show you the gold futures contract. And here's the one I always talk about. And what was interesting today was, if you go back to the video from Friday, I said if we go down and test 20, I'm sorry, my number's wrong, 1191. I think the number was 1191, and close hourly and then daily above that number. That should be bullish for the market, okay? Well, this morning we went down and we tested, low was 1190.60. Okay, we never closed down there. All right, we started closing above that level, and then we took off to the upside. Okay, so that's the first indication that I have. Okay, let's go over to the daily chart. This is the gold futures contract. This is April gold. Okay, that's the first indication I have that this should be a low. Okay, right here. All right, so if that's the case, we should see a decent amount of upside on a couple of legs. Maybe some kind of a rally that looks like A up, B correct, C higher. So maybe we can get to 230, and then maybe ultimately 1230, and then ultimately 1250, 1260 on this move, and then we'll reevaluate, see how we got there. But I would expect at least that much. So far, so good in gold. So as long as we stay above that 1191 level in the April gold contract, April futures contract, we should be good to go. So that's what we call trading against a number. I'm trading against 1191 on close, on market, not on market close, on daily close, 1191. That's going to be my downside limit in terms of support. As long as the market stays above that level on a closing basis, first hourly and then daily, then I think it's a bullish pattern, and I think that there's higher prices ahead. Let's go over to crude oil. Oh, by the way, so GLD. So let me go and show you GLD. What would happen is it would coincide with these numbers here. First, we should see 118, and then we should achieve 120, 121 on the upside, and then we'll reevaluate and see where the gold market is taking us and what kind of pattern it formed to get us to that number, which tells us if there's higher numbers on that move or not. Okay. Let's go over to the crude market, because it was an interesting day. It was one of those days where it had a lot of whipsaw based on some news events that came out. And if you look at the intraday, what happened was there was a rumor about OPEC maybe cutting production. If OPEC cuts production, send the prices up, boom. All of a sudden, oil spiked up. First, it was selling off in the early in the day, spiked up, and then it settled back down. We're still below 49.70. So as long as we stay below 49.70 in this contract here, the April contract, that puts oil in the weaker position. Okay, so if oil's in the weaker position, downward pressure could be had. However, if we stay above, close hourly and then daily above 49.70, we should be forming a daily bottom in oil, which means there should be higher prices ahead for the next several days. And by the way, in gold, we should be forming a weekly bottom either this week or the plus 1 week would be next week in gold. Or so it would be the daily bottom, weekly bottom in gold. I'm sorry to be confusing. Let me backtrack. Weekly bottom in gold forming this week plus 1 week. Okay, that's why you're seeing a lot of this, what looks to be whipsaw action in gold, up and down, but it's all predicated on that 1191 number. Okay, switch over to oil. This is a daily bottom cycle that we're coming up on in oil, and that's due tomorrow plus or minus 1 day. So it could have happened today. It may happen tomorrow, and it could stretch out to Wednesday. But if we bottom in oil tomorrow, plus or minus 1 day, we should have several days of upside, and we could find the price of crude trading. Let me go over to the daily chart and I'll give you a better picture of what I'm looking at. We can go trade back to the top end of this channel here, which is up at $54, $55. If we can get up to $54, $55 from where we are sub 50, that's quite a move, right? So I would take that all day long. That would be basically $4,000 a contract from where we are now in the price of crude oil contracts. If that played out that way. So I'm watching it very closely, looking for a signal that tomorrow, plus or minus, could have been today, but plus or minus 1 day is a daily cycle bottom for oil. Let's move over to the bond market, and I'm going to show you a picture of the actual price of the 30-year Treasury bond. I normally show you the TLT, but I'm just going to do a little bit of a different flavor tonight, and I'm going to show you this is the 30-year Treasury bond March futures contract, okay? Daily chart, all right? Bond prices, let me go in intraday so you can see what's been going on, okay? Bond prices have been in an uptrend, but an erratic uptrend. Look at this. We have a low, higher low, possible higher low, okay? High, higher high, higher high, higher high. This is in an upward channel almost, okay, on the hourly chart. If we go back to the daily chart, all right, you would have to close above this level here, 95.10, okay? No, this is not what I'm looking for. Sorry, folks. I was looking at the wrong chart. It's been a long day. So please forgive me. So this is the daily chart of the U.S. Treasury bond. That was the dollar, and I wasn't even looking. I was staring at the screen, and I didn't see it's a U.S. dollar. So here's Treasury bonds, and we're in actually somewhat of a similar position anyway. But the point is that if you go to the intraday chart here, okay, you'll see that we've basically spiked up again today. We spiked up last week. We keep spiking up and selling off, but what that tells me is the market's trying to put in a bottom. If I go over to the daily chart, okay, I think the market's trying to put in a bottom here, okay? And if it wasn't, we don't have that much more on the downside. It would basically be in this area here and coinciding with that 124.25 that I have been giving you in the TLT. But nevertheless, it looks to be like this market wants to break out to the upside. Why do I say that? Because we're also in a weekly cycle bottom time frame for bonds. A lot of markets have cycle turns. Bottoming bond market should be, okay? Bottoming gold market should be. Bottoming oil market on a daily basis at least should be. Topping market on a weekly cycle stock market should be. All these markets are converging now we're either going to bust some of these cycles or they're going to play out. And this is, I believe, is an important week upon us. And as it gets later in the week, it gets more and more important on how these cycles do or don't play out, because even if they don't play out, that's the market telling us something else is going on. So anything the market does, we look for clues and we look for the market to give us signals. Even when there's no signal, sometimes that's a signal. So what I'm trying to say is that you have to watch very, very closely, and whatever the market is doing, that is a signal. It's just a matter of interpretation. And that's what makes markets. That's what makes two sides to a market. One interpretation versus another of the same information causes a bull and a bear to fight it out. And that's basically how a market works. Okay, I know this has been extended, a little bit long-winded tonight. I'm going to give it a wrap here. Hopefully it's helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.